Welcome to Share Talk, the only podcast where investors come first.
We're joined today by Hayden Locke, who is the CEO of Emmerson PLC. The company released an RNS this morning providing an update on their potash assets in Morocco. Good morning, Hayden. How are you?
Very well, thanks, Rob. Thanks for having me.
That's no problem at all. You recently relisted back on the London Stock Exchange. Do you think you can give us a bit of a background to Emmerson's for those people who don't know about the company yet?
That's right. Emmerson PLC was a specially listed acquisition vehicle that acquired the potash assets in northern Morocco, which now form the basis of the company. We relisted in June of this year, raising £6 million. We had fantastic investor support, and that's really put us in a good position to move this company quickly through the development milestones, which we're currently doing.
Okay. And you released some news this morning. This is to do with the scoping study regarding the mine design and the cost estimation. Can you explain a bit more about the RNS that came out?
That's right. This is a huge piece of news for us because one of the claims that we made, and it was really a belief of the directors, was that these assets in northern Morocco have the potential to be a low capital cost potash development, which is incredibly rare in the industry. Most potash mines have absolutely enormous capital bills, which make them very difficult to build in anything but a high potash price environment. And what this announcement today showed was relative to most potash mines globally, the first major capital item in terms of development, which is getting from the surface to the underground mining horizon, we save an incredible amount of money compared to virtually all of our peers. I think the example that we used in the announcement was against your typical Canadian potash mine, where the cost to build the shafts to get from the surface to the mining horizon is well over $1 billion. Our capital cost is about $35 million, including a 30% contingency. That number was estimated by our independent engineering consultant, Golder Associates. So although it's early stage, it gives you a rough idea of the potential cost savings that we see already for this project, and it really enhances our belief that this project has the potential to be a low capital cost development.
Yeah, it fits with your strategy of low capex. This is the beginning of the scoping study. So how long do you think, basically, to finalise that scoping study it's going to take?
We guided the market that the scoping study would be out in sometime in Q1 of 2019. It's progressing exceptionally well, really moving ahead quite quickly. And so we're now very confident that we'll be able to deliver that towards the front end of Q1 2019. In the meantime, between now and then, we will be releasing discrete portions of the study like we did today, really to show people at various stages that we continue to believe strongly that this can be a low capital cost development. So everything that we're doing will be releasing in a piecemeal basis so that people can start building their own view of the project itself.
So quite a bit of news flow to come along, basically.
That's right. And we put out an announcement in, I think, on the 6th of September, really outlining what the 5 key pieces of news flow would be from the scoping study over the next couple of months. And this was the first piece.
Okay. And what's your view on the long-term fundamentals for potash?
Well, I think the very long-term fundamentals are absolutely fantastic. In our presentations, we talk a lot about global population growth. You know, they're expecting 2.4 billion new mouths on the planet between now and 2050. And although that number it's kind of an abstract number for most people. To put it into context, it's the equivalent of a city of London every 40 days for the next 31 years of new mouths to feed. And in order to feed those mouths, we're going to have to increase the amount of food that we produce from an ever shrinking amounts of arable land. So in terms of the long-term fundamentals, they're absolutely outstanding for fertilizers. In terms of the short and medium term, we're going through a little bit of a market resurgence for potash and fertilizers in general at the moment. We're seeing very strong demand. Last year was a record year globally for demand. This year is going to be another record year of global demand. Over the weekend, we saw an announcement that the Chinese potash contract had finally settled for this year. And it was an increase in price of about 26% over last year's. So we're really seeing some strong price movement, some very strong demand movement, and we expect that to continue for the foreseeable future.
Okay, so a big market there for you to tap into. One last question. It's logistics. I always like to ask this with some companies that work in Africa. What are the logistics like around the mine?
They are absolutely outstanding, and it's one of the key diligence points that I did with my team before we got involved with this project. Because the point that you make is exactly right. For a bulk commodity like this, logistics are absolutely fundamental, not just to CapEx, but also to your eventual margin that you're going to make. And in Morocco, the logistics and infrastructure in place are absolutely second to none. I put out on some social media some footage of us driving along one of the roads, and it is as good as any freeway that you would get in Europe. And that's consistent with the rest of the infrastructure that we're going to be tapping into on this project.
Oh, that's good to hear. Hayden, thank you for taking some time to speak to us about the RNS this morning, and we'll look forward to some more news flows to come.
Thanks very much for the time.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.